Alrighty, let's go ahead and get into the weekend recap here and kind of check out what's going on. So I went ahead and in this video, I kind of wanted to get our weekly laid out for us. We could take a look at those levels, and let's go ahead and take a look at them right now. This is my weekly object tree over here, so it kind of looks like the daily when you're looking at it as well. The Sunday did close out, and then I marked out the key levels, and then you kind of see right now I'm looking at current price action here on Monday, and it's just kind of why I wanted to wait. Let's jump out to a longer time frame, like let's go out to say the 1 hour, so we can look at this a little better, so we can see the whole weekend. So you can see that right through here we're coming into the end of Friday, into the evening, and then in Saturday, and then now we're into Sunday right through here, and then we fell out in the evening. And you can see that really it was just a kind of a flat weekend, and then we went ahead and dropped, and I went ahead and marked the key levels here, and this is late Sunday night, and you can see we lost the breakdown trigger from the weekly, and now we have since then into early Monday morning, late into Sunday night, we went ahead and did this big drop here, and we found support down in this level. This is an area that I had marked on Friday. Let's recap, and I was kind of talking about it as well for a possible breakdown. That's why, like I've always said, you have to be careful on the weekends because you do get weird price action. We did kind of get a run up, and it bounced into the weekly mid zones. So we have a key level up here from the last week's candle up here, and then we have a breakout trigger and a breakdown trigger, which is really playing right here in the middle of the execution zone of last week's candle. So these are key levels I'm going to watch if we are going to start coming back up through here. We really need to start reclaiming this main area right here, which you can see is also that point of control in this area as well, for us to come back up into the higher range. Otherwise, we're going to be looking for a little bit lower in the space here, maybe 110, 112,000 before we go ahead and start going back up. So we'll have to watch for that. And with those weekly levels, it's something to start watching for as we start to trade for. And that's why I like to mark them out for us here. So let's go ahead and go into the kind of just analyzing that weekend price action. And I just kind of want to point, let me go ahead and remove the levels here and kind of look at it as what's going on right now. So we're just looking at, the only thing I have left on here is the fixed range volume profile for the weekly candle that just closed, and you can kind of see how it played in that point of control area into the weekend, and we lost that area. So we had that nice drop on Friday. We found the strong support. A lot of times the move that you see coming into the end of the week, a lot of times will go kind of flat like you saw on the weekend, and then it'll have a continuation. And so right now we're kind of looking for bigger levels, and if you were trying to figure that area out, we could analyze the past prior price action to kind of see where we could go down to, and look at that in a bigger picture if you wanted. But I just really want to look at the weekend trading potential that was there, and really just look at the price action with the indicators that we've always talked about is something that makes it nice to do in a review. So you can see us on this price action here, where I like to use the 30 and the 50. In my case, mine will change colors if the 30 is under the 50 or on top of the 30 is on top of the 50. They'll be different colors. So if it's under, if the 30 is under, it's red. If the 30 is above, it's green. And it's just for a quick glance. Now, you really don't need to worry about that if you didn't have that. Really, it's just exponential moving averages. When they cross, it's a higher chance of it to show you, help you in direction. And you can kind of see like here it crossed and it had a continuation, but when it crossed here, it had continuation. You do need to use your other levels that we talk about to help you find that stronger direction. Here, but we were coming down, testing the key areas of support and resistance. We are under the 200, and I always use the 5-minute as my anchor, but we're also using, anytime you're under the 200, you have to be careful because that's typically your, for simplicity, looking at these moving averages on the 200, and this white one is my 21. If you're under both, lean bearish. If you're above both, lean bullish. If you're kind of in the middle, you're kind of 50-50. And if you look at it that way, like right here, we were under both of them. Right here, you were above, so you're bullish, right? Then it crossed through the 200 or 21. A lot of times you'll see it come back and test the 200 right here. So then you are leaning 50-50 because it could come down through here and then reversal and go back up. Obviously, that's why I say 50-50. Once across here, though, you're more likely looking for this to be more bearish. And you can see it broke down. Then obviously when we lost the 200, it really got aggressive on the 15-minute and really drove down in this Thursday. And since then we were under this. and we got right back above the 21, and you can see we lost it. Now, using the 30 and the 50, you can see that they never crossed back really through. It got really tight right here, and this is where it was going to either create an expansion and push up to the 200, or it was going to fail. And the same thing, this tight moving average just cause a springboard and have them get shoved down or shoved up. And really all you're waiting for it to say, okay, I'm 50-50 right here. If you break under this 21, then this is going to get more bullish or more bearish. It's already bearish, so it's gonna drive away, and you can see that happened. And that's kind of what you're waiting for. And that's why you don't want to get too aggressive when things are in the space, because you want to start watching it. And depending on what time of the day it is and what's going on. Now, this was moving into Friday morning, and we talked about that on Friday's recap, but you can see how this price action reacted, and then it went right back into kind of that tight moving averages, and we couldn't get above the 200. Well, once it got above the 200, then you could be bullish and look for bullish opportunity. And you can see this on Saturday. It really didn't give you a whole lot. It was just kind of flat. You're more likely looking at just continue to break down because you're underneath these two. And the hard thing is at that point is it already built lines in the sand for you right through here. So all this area right here was strength for this to come down to. So this could easily just come down and bounce right here. And the reason why I'm saying that is because this was already all built. This was established support zone. So if you wanted to take a trade, you're going to want to look for this break of, you would have drawn a line like this and said, okay, well, when you break this line, then I'm going to look at taking a potential trade, because we're already in a continuation of a bearish move using my 200 and my 21. But if you can't break this area for me, then I'm not going to get in. And the reason why I say that is because it needs to show that it wants to break down off of the last support area that it created, which was right through here. Say, otherwise, this is going to do what you see. It kind of comes down, it got close to it. This is where a lot of people get into the market, and then it goes a reversal on them. So they build trades to get in right here, like you see, and a lot of times I'll put the stop right up above the 200. That's a classic area to put a stop, and then they're looking for it to go on down like this. And as you can see, obviously you would have got stopped out. And really, you were waiting for this to show that you want to break down, and this would have been a smarter trade for you to take. Just like you saw here on Sunday when it came to that same area that I'm talking about right here, when it broke this area, and that's when you could have got in, and there would have been your trade for Sunday night into early Monday morning. And then here we are again in the same level. Now it's kind of created that same area right down here. It fell down right and created support. So right now you're almost in that same area that I was just talking about for the weekend. You're kind of looking at something in this area for this to lose, and we'll have to kind of build it out. But this is actually talking about today's current price action. You do have a weird pattern being created right now, but you do have a hard line in the sand if you're trying to figure out kind of what could happen here. This could go back up and trade up in this area before we get a breakdown possibly, or this could build support like we saw back here, and it will not lose that area. So we'll have to watch it to kind of see how this interacts. You do see you want to use your your indicators and your moving averages. Right now you are underneath the 200, right, and you're underneath the 21. So this is leaning more bearish, and you're testing this last line of support here. So this could easily start to break down, probably back test in this area and fail, which you could use your lower time frames for you to help make those decisions here in this area. So we'll have to kind of watch that. But that's also what you were looking for on the weekend, and your trade opportunity was right here from the end of the week. And be able to trade it accordingly. So that's kind of what you were looking for, the patterns. That's kind of what I just want to show you, key levels, and why we wouldn't have taken a short right here. Now, as it broke back up, you could have said, hey, I'm going to take a long in this area, and because if you get it back above, and the same thing, you could have ran a tight stop if you wanted, depending on how you want to trade. You could evaluated older support for you as well. Now, in this case, I would have been looking for it to come back up into this area to test this liquidity pocket up here, and see it get back up there. Obviously, you can see that it did start to break down and didn't really ever get the run up, and it started to lose itself and go down into breakdown. And looks like it's going to go ahead and start breaking down lower. That's why you hear me talk quite a bit about using the 5-minute 21. So this was basically the entry of somewhere right in this area, like I was showing you on the 15-minute. Of course, this would have ran up in this case, but it would have lost to 21, and you would have got out right here, and it would have saved you from getting stopped out, having it come back down against you and stopping you out. That's kind of why we trade with the 21 on the 5-minute. And if you're in that trade, that was a nice move. You would have made a little bit of green in the account, and you would have got away from it. As you can see, I'm still in the 5-minute, and I'm just going to point that out as well. Again, right here, like we were talking about, how to lose this key level. This would have been roughly your entry right in this area, right, that you would have got into. And as you can see, the same thing. If you didn't get out down there as it lost the 21, that would have been your exit, and you would have had a nice little trade again, and you would have been safe. But you can see that it respected the 21 all the way down until it rejected right here. So anyway, that's why we use the 5-minute 21 to get out of the trades, and just mainly because it keeps you safe from getting ran all the way back up against you. Now in this case, obviously it's holding here on Monday morning. Monday morning does have some weird movement, so just wait for key supports to get lost, and then that way you can be sound in the trades. Otherwise, this may reversal and get back above these 2 moving averages, and then we're going to go back bullish, and we're going to look for some key levels up here. The main line in the sand that I'm really watching right now is around that 117,500 range. That's going to show that we're going to flip and continue to start building back up, but that also could be a strong rejection area. So this may run up to about that 117,500 range. You'll see a rejection, and then this is going to start to drive back down if it can't rebuild that area. So that's what we're looking for this longer week, and kind of see what happens. Otherwise, I kind of expect us to see 110,000 right in that area and find some strong support there, and start to rebuild, and we'll have to reevaluate at that point. So those are kind of my 2 levels for the week, is 112 to 110,000 right in that range. 117,500 is kind of what I'm looking for to see it either test or break and hold, and let us be able to rebuild into more of a bullish move. So, all right, guys, I'll go ahead and let you go. Happy trading. Like and subscribe to the videos, of course, and ask any questions in the comments. We can go from there, but make sure you join our lives this week, and we will see you in the next recap. Happy trading, guys. We'll talk to you soon.